Good morning, everyone. I am Linda Owens with the mobilepaymentstoday.com publication, and I'm very, very excited to be here as a part of the panel today, considering all of the news that we've been having in the last week in mobile. With iPhone 6 launching, we have MCX having their new mobile payment platform, we have ISIS changing their name. So the reality today is that mobile is the #1 technology for customer engagement. Not only are companies changing their strategies to be more mobile focused, we also have a lot of startups that are doing very well in purely just having a mobile technology focus. An example of that would be Uber. So in today's session on mobile technology trends and issues, we're going to be taking a look at ATM and mobile integration, mobile payments as a whole with mobile wallet solutions and NFC, proximity services such as beacons and BLE, and also, of course, a look at Bitcoins and the role that they're going to be playing in mobile as well as the payments industry. So let's get started. We have with us our experts today, George Peabody, who is the partner for Glenbrooks Partners. George is experienced in payment technology and in IT and entrepreneurial management to help clients with strategy and market development. He applies his consulting services and expertise across a range of business and technology issues with particular emphasis on competitive positioning, technology investment, road mapping, and innovation. We also have with us George Leehy, who is the CEO of Payment Alliance International. As chairman of PAI, John has grown this Louisville-based company with more than 70,000 ATMs, 20,000 merchant acquiring customers, over 200 community banks, and 90,000 retail customers throughout the United States. And we also have with us Sophie Charlotte Moati, and we call her SC. She has created Emmy-nominated mobile services used by billions of people. Currently, she is general manager of Trulia Rentals and founder of Products That Count, a think tank on mobile innovation and leadership. Prior to Trulia, SC was a product leader at Facebook. We're going to have mini presentations by all of our experts today, followed by some Q&A by myself. And of course, we're going to also open the floor to the audience. And let's get started with George.
Thanks very much. Again, it's a real pleasure to be here this morning. And my job here is to try to set some context for all this activity in the mobile space. So let me take you through some of the themes that we at Glenbrook have been following and some of the subtexts, if you will. I think if you look at these meta themes, none of them will surprise you. What's really happened with mobile, and particularly software as a service, web-based technologies. I think what's the phrase I see over in Silicon Valley now? There's like 500,000 is the new 5 million. 3 guys with access to software as a service can really build a phenomenally compelling application for very short money compared to what they could have done 5 or 10 years ago. So innovation is much easier. Deployment is faster, but in the payment space, there's a lot of chaos, right? Lots of new players. We get asked all the time, which way is this thing going? Security clearly is a concern. But one of the beautiful things that's been happening is that payments are getting embedded into applications, into our apps, so that the payment actually is starting to go away. I think one of the great examples is, how many of you used Uber? More than Bitcoin, that's for sure. So for those of you who didn't raise your hand, I highly recommend the Uber experience. Underneath all these, all right. Underneath those meta themes are a whole bunch of moving parts that we'll be talking about this morning, different technologies that have got to do with kicking off a transaction, or in whether they're regarding how it's done or how it's secured. We had a lot of news this week, which I'll talk about very briefly from Apple, with the announcement of Apple Pay, which which nudges the industry forward to an extent. Lots of tools to use, right? I think we'll have to update this slide. In the wallet world, in terms of how we kick off transactions, NFC has suffered for a number of years, but Apple Pay looks like it's going to nudge it in the right direction. On the right-hand side, it's the set of tools that an Uber uses to embed a payment transaction, because the payment credential's in the cloud. In the middle, this is where the Android lives, that host card emulation. Pretty attractive way for a bank actually to embed a NFC payment capability into their mobile banking application for their Android using customers. More tools than we've had in the past, more alternatives to choose from. Then there's this big question, is like, what the heck is a wallet? And when this wallet discussion started, it was, is there going to be one wallet to rule them all, some form of Uber wallet that does everything like this? Or something, and so we've seen different iterations of that. On the left-hand side, you've got a number of that are sort of focused on payments. And on the right, they're more around, they're there and deployed for the service of the merchant who puts them out, where it's really the larger context is more about the commerce experience rather than about payment. Merchants want to put their apps out in the world because it helps them sell more. It's very challenging yet, though, to do more than incentives, provide some information. But when it comes to redemption of incentives at the point of sale, that's really hard. And it's going to be a while before we see, I think, very strong and successful examples of that. But it's the commerce space that's really driving this. That's where the revolution is. Lots of folks have tried to be cross-merchant applications. PayPal, as you know, not only is absolutely dominant from a wallet point of view online, but PayPal is now working very hard to become a real player at the point of sale. Google's had its struggles to do the same thing. SoftCard, the NFC-based payment method formerly known as ISIS, has really struggled, and the Apple Pay announcement on Tuesday certainly didn't help its cause at all. A few others, Amazon, MasterCard, Visa, all have new ways of trying to appeal to merchants to become a method of payment, to get embedded into either e-commerce or mobile applications. And a few more. Level Up, sort of a niche player. Apple Passbook is now truly, unequivocally a wallet, because it can do point-of-sale transactions at only about 220,000 merchant locations, but a number of issuers with Apple Pay are now embedded in Apple Passbook. And yet again, Apple has taken its design sense to produce something that looks compellingly, I can't say compellingly elegant, but certainly more elegant than prior NFC approaches. Then Paydium's a white label provider, and I've got them there because they are the engine underneath the Merchant Consumer Exchange, MCX. How many of you are familiar with MCX? Great. We'll touch on them a little bit more as I wrap up. Okay, let's look at some of what's been successful. Starbucks mobile app, which takes 10% of their point-of-sale transactions now, at least. It's the poster child for successful mobile payments. Uses some of the classic building blocks of using a closed-loop system, QR codes to make, or barcodes to make the transaction possible to kick it off. It's nicely integrated into Passbook. So nice, confined, successful application. I would never know that I had a free latte coming to me without this application, because I just don't pay attention. But this thing keeps me coming back because it keeps count for me. And that's in fact the kind of tool, the kind of experience that really makes a qualitative difference between simply making a payment. I'll tell you quickly my NFC payment story using the ISIS wallet. I walk into McDonald's, there's a 17-year-old boy behind the counter. He watches me take my smartphone out, unlock it with a PIN, find the ISIS app, unlock that with a PIN, and then tap it. And he goes, wow, that's really cool, but wouldn't swiping your MagStripe card be faster? Okay, I thought it was funny. Out of the mouth of babes, right? Some other successful ones, Macy's is on the left, Airbnb is in the middle. If you haven't tried Uber in terms of the payment experience, disappearing, never mind the convenience of knowing precisely where you're going to get picked up, because the app shows you where the car is and tells you how long it's going to take it to get to you. And when you get out of the car, you just get out of the car. You don't have to. You've already paid. It's part of the experience. For me, that's close on to magic. Then we've got a couple others that are still in the works. The MCX's wallet is called Currency. MCX is, for those of you who aren't familiar with it, is made up of some of the giants in retail in the US, Walmart and Target among them. Over $1 trillion in annual spend, 110,000 lanes that they manage. They're standing up Currency, MCX is standing up the Currency wallet because they hate interchange. So they're behind Currency, they're working with NICE, or FIS, and their NICE switch to connect up to something like 80%, over 80% of the DDA accounts in the US. So a very different approach to consumer payments at the point of sale. They are starting to go into pilot this fall. I think next year it will be particularly interesting to see how well they do as they launch, and convince consumers to in fact do something very different, fund their payments from their bank accounts. And then there's Apple and Apple Pay, and our assessment is that it meets all of the criteria that you would expect from Apple. They've done a wonderful job orchestrating this fairly fractious payments ecosystem. They've pulled a number of high-profile, large issuers. They've corralled Visa, MasterCard, Amex, and Discover to participate. They're using tokenization, which is being rolled out and promulgated now finally by the card networks. So they've done a remarkable job knowing how the payment systems work and aligning the interests of players, and I think making the payment experience a better one. So we'll see. It certainly gives NFC a strong nudge. Got to keep this stuff, I kind of like keeping things in perspective. This slide just shows where e-commerce and m-commerce land, and this e-commerce and m-commerce stuff is still, as a percentage of overall retail transactions, it's still well below 10%. So the good news is there's lots of opportunity for these channels to pick up more activity, but it's still, they still have a long way to go. And it's not necessarily going to be an easy road. So digital wallet adoption, it's absolutely still ahead. Cash is remarkable stuff. It's incredibly resilient across all demographics. We heard earlier that millennials are favoring cash because they're also favoring debit. In our Glenbrook Boot Camp training class, we show a slide that demonstrates the massive shift at the expense of check over to debit. And I think most of us in here probably use our high rewards credit card because we like getting the miles. But millennials use debit cards because they need to know what their balances are all the time. They live in a much more cash-oriented. A lot of them have student loans to pay off. So debit is absolutely king, and right behind debit is cash. So the mobile wallet world has got a long way to go yet. I'm just going to close on this slide. We've talked a lot about security, and we've talked about some of the security technologies that are being deployed. EMV, which only addresses counterfeit card fraud. It's likely that in the US, we won't be doing chip and PIN on credit. Some issuers will, but many won't. So all we're doing with that is preventing counterfeit card production. But we still have all these card numbers flying around. So we need tools like encryption and tokenization. But when you think about the tools that we've got, many of them right in our hand, right in that smartphone, as both an aggregation point of information as well as a generator of data signals for us to do fraud and risk analysis. Just give you a quick example. In all of our phones, we have GPSs. In the Apple Watch that's coming out, it's got a heartbeat monitor, an accelerometer, so it's going to actually get a wonderful, completely accurate fingerprint, if you will, of not only a true fingerprint, but a fingerprint composed of where's George's heart rate at, what's his gait, is the gait the same? Because that's going to watch how my arm moves back and forth. They'll be able to make a fingerprint, an assessment of my gait based on that. Now combine that with behavioral data from the big data side. Where do I shop? Where have I shopped in the past? Where am I now? From the social side, who am I connected with? What's the reputation of those people that I'm connected with? I used to have some B-1 bomber pilot friends, and their phrase was, "We have your coordinates." We will have, from risk, never mind privacy point of view, we'll have your coordinates. So we're going to have a whole range of tools to improve security, hopefully improve consumer experiences. And I think one of the things we'll be looking forward is that will be on the agenda going forward, in fact, will be a larger discussion about privacy because of these tools. So I believe that is, yeah, thank you very much. Let me turn it over to John now.
Thank you, George. Good morning. It's a pleasure to be here with you this morning. I think George is a little bit like the permanent member of the UN Security Council. He's going to be on all the presentations today, so you'll get to know George very well. Nicely done. There are those specs that I need. I'm John Leehy, and yes, I am an ATM guy. And just saying that makes me feel old and particularly uncool, despite all the nice things Tom said about the ATM business this morning. And I'm here to advocate for the ATM business as it relates to mobile payments. And it's not as glamorous, I think was the word you used, or elegant. And it certainly doesn't, ATMs don't offer the kind of swashbuckler, let's plunder the village sense you get around Bitcoin. But I think that it is at the heart, the very heart, of what it is we're trying to do with mobile payments. And I'm one of those guys that I absolutely still thrill at the sight of crisp $20 bills snapping out of a dispenser. I think that is a beautiful, beautiful thing. And I'm also one of those guys that scoff at this notion that cash is dead. I think we're overplaying that. I think it's just a little early to call the priest for last rites on cash. I think that there's quite a runway left on cash. I think it's a valuable and viable and appreciated form of currency, and it'll be here to stay. Yeah, I should mention too, this Apple thing. I don't want to be an Apple lackey, but you know, there's the announcement that they made this week. Certainly, if nothing else, ratchets up the pressure on all of us to figure this thing out. Now, candidly, I think some of you might be overthinking it. Apple Pay was certainly a hell of an announcement. From our perspective, none of our ATMs actually will interface with Apple Pay in the short term. So what we've decided to do is we basically printed up a bunch of Apple Pay stickers and we're putting them on all our ATMs with a little text underneath that says if your iPhone 6 doesn't immediately connect to this, go ahead and use your debit card to complete your transaction. So I'm not worried about integration in the short term. Litigation maybe, but all right, I've got a number of arguments that I want to make this morning, and I've only really got about 5 to 7 minutes, I was told, to make them. And I've got one slide, but it's a really, really busy slide. So, oh, and you already see it, okay. But there are really three points that I really want to drive home in the conversation today, and then I'll get out of your way and we'll go to the Q&A portion. First, I think we need to be pragmatic in our execution whenever possible. I think we need to avoid the unnecessary retooling of infrastructure that works today. I think it's important that we really, really look at this from a pragmatic perspective, take some of the zeal out of the design process, and build value in for the consumer. I think secondly, we need to leverage the consumer confidence and familiarity that already exists with ATM transactions and use this very common and familiar transaction to help some of those would-be, newbie in-payments participants to basically cut their teeth and to participate in the system. And then lastly, and I know this is a tough one because we can all be knuckleheads, we need to seek unprecedented collaboration. And in those areas best served not by differentiation, by commonality, we have to pursue that. I'm watching this as a guy that is benefiting from the existing infrastructure that's been built over the last 30 years. And I'm looking at this, and every time I get a heads up on what somebody's doing, it's a new design. We're not working to leverage the rails that are out there, and I think that that's really a challenge for us as an industry. When we collaborate, we do some amazing things. All you got to do is look at the business and how the payments industry has evolved over the last 30 years. And I've been in it 30 years. And I've watched it from a lot of perspectives. When we work together with a common interest, we do really well. When we get parochial and we all hunker down and go into our silos and argue that my technology is best, we don't differentiate to the benefit of the consumer. We just make things more difficult to deliver. So let me take this slide for just a second if I could, and I just want to touch on, maybe just speak to some of the stakeholder considerations and expectations, starting with the role of ATMs. First off, I think you've got to recognize that you've got this infrastructure that's already in place nationwide, and customers are using it, and I think it's a great place to start. When we're thinking about the different kinds of transaction types that can be facilitated by mobile payments, I think this is one place that we start for a number of reasons. I also think it's important that we continue the model that we enjoy in the ATM business where you deliver a predictable experience for the consumer. I mean, that consumer walks up, they don't wonder about what bugs on the machine anymore. They don't wonder whether or not their card's going to be accepted in the city that they're in. We're beyond that. They know what to expect. They also go, I know exactly what the transaction's going to look like. I may see different screens, but the flow of the transaction is still there. And I think that notion of predictable and consistent is meritorious. I think we already have the benefit of consumers, their perception of an ATM transaction being low risk and highly reliable. And I think we need to leverage that because I think that's one of the challenges when we get to in-payments. What am I going to run into? And then I think we also in the ATM world, while not everybody is an ATM user, for the most part we have kind of a cross-generational appeal. There's a familiarity that needs to be leveraged. What we don't want is to do all this work to just have a micro market or a microcosm of the payment space that are the early adopters and long-term adopters of mobile payments. Consumer keys, again, they like the idea of speed dialing my cash. I don't think anybody could imagine, look, a wallet is a collection of apps, right? We'd all agree, I think. How many times have you downloaded an app, 30 days later you wiped it off, you deleted it because you never used it, it had no value? What I would say is that any credible wallet has got to have an ATM component. I would argue it's not the basis for differentiation. I think it's just the ante up for poker. Don't worry about making it cheaper, make it richer. And to me, I think for the consumer, I think richer means know me, thank me, reward me, talk to me. I think to make it a better experience. I don't think that the consumers are really looking for a cheaper transaction. And then it's got to fit me. If I preset my cash and head for lunch, I need to be able to change my mind because that's, as a consumer, that's who I am. That's how I do things. As a deployer, you know, we want to ride the existing infrastructure. We want to ride the rails. There are a lot of things that work really well, and some of the technologies leverage that, and some of them don't. And then, of course, our preference, which I think is a fair consideration, is think in terms of software, not hardware. There are some solutions that we can implement. I got 70,000 ATMs. I can do certain things and do them fast if it's software. If I've got to go to a hardware model and I've got to retrofit them, and candidly, even that involves NFC or low energy Bluetooth, then I've got physical changes. So now I've got to be out there. It costs me money to do that. It's a much more significant investment. Are we willing to do it? Probably. If we can balance the economics, we're probably willing to do that. But the point is, do you really need to foist that burden on the infrastructure? The difference to you ultimately is the availability of cardless transactions on a wide scale in months as opposed to years. Makes a huge difference, and I think we need to take that into consideration. And then I'll make a comment about balancing the economics and kind of the pricing freedom. Somehow, in all corners of this ecosystem, whoever invests and needs to be rewarded, needs to be compensated. And that's exactly in the ATM business, in the issuer business, that's how it's always been, right? In the early days, interchange was really a construct by which we said, thank you, can you create convenience for my customers in the marketplace? And that's how that happened. And so interchange, of course, interchanges continue to go down. Candidly, it's income to me, but it should go down as a result of there are plenty of ATMs. We don't need a bunch of folks out putting out new ATMs, right? As issuers, you don't need that. Your cardholders have plenty of utility. But on the other side of that is now you want to retrofit the marketplace. Interchange is one of many vehicles you could use to do that. And the beauty of that is that if you added a nickel of interchange income to the acquiring side for every transaction that is a cardless transaction that was satisfactory to your customers, the beauty of that is that you only pay for what your cardholders use. It's a small mechanism. We don't need to overthink this. There's a process for fair exchange of balanced economics that exists today. And then pricing freedom, there are some issues. It's fairly antiquated. In the ATM business, I don't know if everybody realizes this, but when I have a location, I have a single surcharge no matter what my costs are, no matter what my location looks like. Now, I can have different surcharges at different machines. The convenience fee that the customer is happy to pay changes, is frozen at the machine level. So, in other words, I can't take into account costs or incentives or service, other things that you might want us to do, and I think we need to revisit that model. Issuer keys, again, you have to bring demonstrable utility. It can't be a novelty item, and I think we've seen that in some of the other countries where it is an absolute utility of value, then it works. If not, then it's just kind of a notional hobbyist sort of approach. I'd jump down. I'd say don't make the transaction the basis of competition. Okay, what I mean by that, if you look at a card transaction today, I'm a merchant acquiring business, the actual event of accepting the card, that isn't the basis on which issuers compete, right? It's marketing, it's fees, it's the quality of your service, it's presentation of statement, it's that, those are the other things, but it is ubiquitous. I would argue that the plane of competition in this particular opportunity shouldn't be the actual transaction itself, and that suggests a certain higher degree of homogeneity that says our energy ought to be prior to and after that transaction itself. I'll jump down a little bit. I just think that this is an opportunity for symbiotic and collaborative relationships. We have a new structure, and we need to work through those things. And some of the models where we actually get a cardholder telephone number, for the first time as an ATM player, I'll actually know who the cardholder is. Now that ought to be terrifying to a lot of you, and a lot of you ought to see that as a real opportunity. Today, what do I get, right? I know that somebody's there, I know the time of the day of the week, I know the geolocation, I know the size of the withdrawal. But the reality of it is I can't go back and talk to the customer because I don't know it. Some of the two-factor authentication schemes involve phone numbers. We need to talk about, do you want me as a physical manifestation, the ATM owner, the merchant, do you want us to be an extension of the issuing group? Do you want us to give them incentives and rewards on your behalf? Can we be collaborative enough, or will everybody go to their corners and do that which is easiest to do in parochial? So, and then again, I encourage us to forecast or to protect the consumer's ability to forecast the experience. If they've got to walk up and one time I'm NFC, another time I'm using a vCard VPN, and another time I'm using some other proxy identifier, then the consumer now has got to figure it out. Don't leave it to the consumer to figure it out. Let's figure out together how we can make this easy so they don't have 5 new cardless buttons on the ATM screen. So with that, let me just say glamorous, no. Elegant, not so much. Geeky, by comparison, no, not really. But try these labels: reliable, accessible, trusted, familiar, and yes, necessary. I think the ATM business is a great place for us to start in our push for mobile payments. Thank you.
Good morning. It's great to be here. So I'm coming from San Francisco in California, and what prompted my interest in Bitcoin is that earlier this year, I rented out a home to a new tenant, and he said, well, can I pay in Bitcoin? Like, okay. I said, no, I don't accept Bitcoins, I'm just a person. And then started to, to research Bitcoin a little bit more, and saw this as a very exciting opportunity, which leads me to the pledge that I'm going to make today, which is that mobile payment providers need to embrace Bitcoin. So industry analysts predict consumers will make $1 trillion in purchases via mobile devices next year, and yet the ecosystem to make that happen is far from being in place. Some innovators have experimented successfully to disrupt traditional swipe-based point-of-sale payment systems, but incumbents have yet to place their bets, and this is stalling parts of our economy and create disruptive opportunities for alternative currencies such as Bitcoin. The truth is, the alternative to Bitcoin seems daunting, and here's why. First, mobile costs outweigh the benefits. Despite all the hype around M-payment or mobile payment, adoption in the United States has been slow, and there's many good reasons why. First and foremost, current mobile payment technologies such as NFC or beacons, BLE, do not offer meaningful enough benefit to consumers who are used to swiping their credit card and find it easy enough. Merchants do not benefit either, as they would still incur a 2 to 3% fee on non-cash transactions, in addition to the high cost of switching to a new system. Next, the ecosystem is extremely complex and suffers from the tragedy of the commons. Stakes are high for banks, telecom providers, payment providers, phone manufacturers, and more. Sophisticated fraud schemes, unsorted business models, conflicting consumer ownership, and stringent chargeback rules favor the status quo. No single player has an incentive big enough to move until and unless everyone moves in the same direction. In such intricate situations, regulators often intervene to set public policy, standards, and deadlines that act as forcing functions for every part to align. But in this case, there is no compelling reason for them to do so due to the lack of consumer benefits. And hence, the Federal Reserve is likely to stay on the sideline unless it is compelled to get involved, as it was with debit card fees. So Bitcoin could enable mobile payment technology, and here's why I think that's the case. The most successful mobile payment systems have been built by startups like Square, Stripe, and Braintree, which PayPal recently acquired. While they have received a great traction monetizing new services such as Airbnb and Uber, they have been slowed down by the recent banking crisis, and they will have a hard time making a compelling case to replace payment systems of more traditional marketplaces, considering the unfavorable cost-benefit analysis. On the other hand, retailers are seeing prices squished by e-commerce giants like Amazon, and could increase and in some cases even double their margin by cutting payment transaction fees. Enter Bitcoin's is safe, hopefully, and secure payment system at some point, which charges a minimal processing or minor fee. Bitcoin can be transferred anywhere in the world in minutes instead of days or sometimes weeks with the current payment systems. So merchants could receive their money much faster. Bitcoin is a disruptive technology with the potential to shatter the existing ecosystem, but many aspects of its own ecosystem still need to be ironed out. So what's the alternative if Bitcoin is not the solution? In looking at mobile wallets, offering retailers and e-commerce marketplaces a set of value-added services in a comprehensive M-wallet could help them retain consumers. These services would include payment acquisition, which lets consumer pay with any form of payment, anytime, anywhere, from credit card to prepaid, direct debit, check, and loyalty points. Loyalty, which provides coupon and offer to the right segment at the right time in the right place. Multi-touch attribution, which allows merchants to optimize their marketing across platforms. Securitizations, which banks will value because it reduces individual risk. Fast settlement, which would significantly speed order-to-cash process and let money be transferred in hours instead of days or weeks. An M-wallet offering in the US will likely leverage the Beacon BLE technology over NFC because it has the potential to create very light touch and personalized consumer experience. And because technologies such as Apple iBeacon could be more affordable to deploy than NFC readers, even though Apple made an announcement this week about an NFC phone. The increased consumer value of an M-wallet over current M-payment solutions may be enough to make the benefit of an upgrade outweigh the cost in the eyes of retailer, but so much needs to be worked out to get there that the Bitcoin alternative needs to be prioritized and seriously considered by all players in the payment value chain. Thank you.
All right. While I'm going to get ready to ask some questions here to our experts, I'll let the audience also please be thinking of some questions. The first one for all three of you. What is the biggest roadblock in using mobile device for making purchases that you see today?
Let's start, John.
Biggest roadblock?
The biggest roadblock.
I think in general, I think we have so many questions that are yet to be answered that it really, I think it will be the extent to which we as a industry could collaborate. I think we really have to find a certain sanity in the flow and not debate the small points and literally find some commonality. Otherwise, the consumers are going to struggle to decide, is this a consistent and reliable transaction that they could count on? And I think that's a fairly significant issue for us as an industry to wrestle with.
I think there are too many solutions for mobile payment, small niches. So there is no, well-accepted payment method, and that's a huge hindrance. And that's the first thing. The second thing is the alternative to, pulling a mobile phone out of your purse or pocket is pulling a credit card out of your pocket, and that's just about the same amount of effort. So why would I, pull out my phone versus my credit card?
And you forgot cash.
Yeah.
That works
Cash,
too.
sorry.
So I think we're in for a pretty long period of experimentation, and I do know that the experience of using NFC can be better than it has been, and I believe that Apple Pay could demonstrate that. The biggest challenge, I think, is there's an assumption in this whole mobile payments world that consumers are really going to change their behavior based on the incentives that they're given by the merchant or a card company or whoever's providing that context. Will I really do something different for 3% less or 5% less on a regular basis? Sometimes it's absolutely work for some merchants. It's not going to work for others. I think one of the opportunities in commerce is going to actually be, to your point about Bluetooth Low Energy, it's going to be, but this is out there because it's so hard and it's beyond the payments piece. With Bluetooth Low Energy loaded on a phone, I go into Best Buy. If I'm lingering in front of a big screen TV from Sony, Best Buy actually could make a market and say, boy, he's been standing there for 3 minutes looking at that Sony set. Let me push a a coupon from Sony to see if I can nudge them into buying it right now. That's could be a big commerce market, right? That's definitely one-on-one advertising between the manufacturer and the consumer. That's really hard to do. Integrating that kind of thing and then integrating it into the store payment system, it's a lot of challenge. So I'm looking for a continued use of cards on file, or tools like Visa Checkout and PayPal, methods of payment that are up, and then they're embedded in the consumer experience. And I think that's where Uber, Chipotle, anybody gone to Chipotle and used the mobile or use these pre-order apps? All right, you have an assignment, go out and do this. No, I mean it. Because a lot of the folks you're selling to, they're not in this room. They're 10 and 20 years younger than you are. Chipotle's made a lot of money by building an app that puts your card on file. In fact, in New York City, it was where you could order on your way to the store. So you could walk up, and they had actually two lines: one for the folks who wanted to order like normal, and the other just wanted to pick up their burrito or whatever the heck it is. And it was so popular in New York that the line at the pickup side was longer than the walk-up side, right? That's the kind of what you're giving consumers convenience. That's one of the things we treasure about ATMs. It's convenient, and we can find them, and they work predictably.
Hey, George, if I could, I think you're making an excellent point. I think it really kind of cuts down to, I'm not sure that we're spending enough time thinking about the reasons why. We've spent so much energy thinking about how. And I think when you're talking about Best Buy as an example, it's really not about the capacity to from a technology standpoint to deliver. I think the issue is they're saying why. What are the economic reasons? What are my customer love reasons? And I think we need to really answer some of those questions. And I think there's a dangerous set of assumptions that we can make because we're old guys, right? And so we think that the reasons why we might do something might very well represent the generation that will be the early adopters. But I do think we need to focus on trying to get some sort of a response, some sort of a vernacular in the industry that says, look, from a retailer standpoint, from a stakeholder standpoint, why would we do this? What are the whys? And if we get a strong enough set of whys, I'm pretty confident we'll get it done.
So, John, I got a question for you. The ATM industry is looking at a 2017 shift in the U.S. to be able to accept EMV cards. Is there, I'm embarrassed to say I don't really know, I don't have any insight in this. What I'm asking, is there any move to, at the same time, deploy NFC, contactless capability at the ATM during that upgrade cycle? You've got to do it anyway.
Yeah, again, the upgrade process is going on right now. We have 11,000 ATMs that are in the process of currently, they've either received the kits or they went out fully ready for EMV. So that process, because that train has left the station, it would have been wonderful if we could have facilitated some sort of overlap, but it didn't work out that way. I think the extent to which we do it will be a standalone decision, separate from EMV, because even if we have a significant portion of your transactions that were to go to mobile payments, we'll still have customers to serve, and we'll still have an obligation to deliver EMV, and we're supportive of it. So I think what we're going to have to do is we're going to have to look at the business case associated with making that next trip out, the physical issues associated with that. And I worry less about making the separate trip, and I worry more about having to do it repeatedly to accommodate a variety of different M-payment schemes. So think about it as a cardholder. If you walk up and you say, I'm doing a cardless transaction, bam, and that's how I jump into it. That's great. That's inviting. That's easy. Now I'm using whatever my methodology is. But if I got to go in and I've got 5 different buttons on the screen presenting 5 different logos, I'm so afraid that we've stepped back in time and we're Mac versus Star versus Nice versus, I think we've lived this. And I don't know how to stop this bus, but I think that's probably more disconcerting to us than the notion that we'll need to go out in addition to the EMV work that we're already doing.
Perfect.
Does that make sense?
Yes, it does. So final question from me here. So there are a lot of players in the mobile payments industry, from the card issuers to the banks, merchants, POS makers. So who do you think is going to be the winner in the future? It's a very tough question, so you have like 30 seconds to think about it. And there's no wrong answer.
Oh, phew. So, I think it's actually the wrong question to expect winners and losers. I'm more, I believe that the card networks, for example, are actually becoming more resilient because, frankly, if they're finally getting on the bandwagon with tokenization and encryption. They do that, they're going to be gaining business rather than less. Regulations, the regulatory environment around banks is really well developed. Banks aren't going away, but they need better ways to reach out and serve their customers. And the ATM channel is a great one. We're seeing banks looking at extending their mobile banking platform. One of the great innovations was remote deposit capture, taking pictures of checks. That's so cool, even though checks are as old as it gets. But banks are now looking at host card emulation, using that NFC chip in an Android phone. They could actually payment enable their own credit and debit cards from inside their mobile app on Android devices. That's, they're absolutely considering doing that kind of stuff now. So there's a very strong incumbent ecosystem, and where we're seeing most of the innovation, where folks are winning, it's by segment where the shifts are happening. Square is really innovating on the initiation side of the transaction flow, and they're really taking it to the traditional merchant services, the merchant acquiring business. Why? Because it's in fact easier to innovate there than also try to innovate at the same time as how you move money. Someone else has got to worry about how you move money.
John,
I didn't even answer your question very well, I'm sorry.
I agree with George. I think it's a really hard question. I would say the winner is likely going to be the one that, or the winners are going to be the ones that figure out how to deliver like a real compelling value proposition to consumers around ease of use and fraud, and to merchant around order to cash. I don't know that there is a clear winner now, and I think we'll see actually multiple waves of winners, innovators, like busts and booms over the next few years.
Yeah, I couldn't agree more. I think the question frames a notion that there's going to be a single winner or a limited number of winners. I think starting from the consumer all the way through the retail community, through the financial institutions, I think, and the non-banks that are participating as de facto financial institutions, whatever role. I just think there's so many different ways to win. I think we're still struggling to define what winning, what victory looks like, what success looks like. Is it processing a lot of transactions, or is it having a deeper, more valuable relationship with the consumer that has the propensity to buy other goods and services? I don't know, but I got to tell you, whatever we forecast for winners and losers and outcomes, I suspect it's going to be hyper conservative relative to way this thing always finds its own level. And I think we're going to find that there's things that when this group comes together in 5 years, I think we're going to be amazed at some of the low expectations that we had. We'll look at some of the practices that are employed today that we believe in. We'll go, man, those are leeches on wounds. I mean, how could we have ever done that? There's so many things that are going to happen that I think it's just a really terrific time to be in and around the payment space.
I agree. Any questions?
Hi there, Brendan Doyle from Cash Management Solutions. My question's for John. Before, George mentioned about cash being a guarantor of privacy. For me, it's more than that. It's about freedom. So I want to be able to go about my business without governments and card schemes and banks and retailers knowing where I am and trying to manipulate what I do. I'd rather be private. But cash is under massive attack, because as soon as I say that, people say, what's he up to with this cash? Yeah, and we've got a problem with that. And I think cash is going to have a real difficult time over the coming years. So my question for you, John, is there anything more that the industry can do to defend cash and put it out there as being something that is actually cool and something that you should be defending rather than something that we should be thinking is a bad thing?
Yeah, I don't know if you'd argue that cash is a poor man's Bitcoin or if we need to get T-shirts that say "Got cash," you know. What I would say is, I think in terms of defense of the cash, I think groups are doing it, and I think what we really need to do is we need to slay the dragon, the myth. I mean, all we got to do is look at the numbers around the globe. That, again, we don't need cash to hold its position for us to still recognize it as an important component of the, the currency mix. But it clearly, all you got to do is look at the numbers, as you've indicated. You just got to look at the numbers, and it's staying strong. Cash will take care of itself as long as we make sure everybody knows the numbers.
Thank you. I perhaps we'll get to this in the next panel, but I feel that financial institutions kind of have a chicken and an egg moment, or like a beta and a VCR moment. So while mobile is the new shiny, sexier, glamorous thing that everyone's talking about, it's also a far easier method to update. To John's point, ATM, we have hardware. There's a lot more that's involved with doing anything to it, particularly once you have to touch that machine. So how, as for a mobile tech issues and trends, how do you expect that FIs can reconcile the risk to implementing the wrong type of technology? So for instance, if we all update our ATMs to NFC because we think Apple's going to make this work because Apple has a history, and then suddenly the marketplace doesn't go that way, then all the FIs have spent significant amount of capital updating hardware that no longer applies, and so there has to be another significant investment in capital to upgrade to the next shiny new thing. Do you have any recommendations for reconciling that particular issue?
I've got an idea. So I don't think if an FI, based on the Apple announcement, ran out and started saying, I'm going to put NFC in, I think it'd be making a mistake. There are 6 million permanent sort of merchants in the US, and then there's potentially 21 million mobile merchants that Square started with. But they're only, the contactless footprint and could take NFC right now in the consumer space is very small comparatively. It's only, I think even in the Apple announcement, they said there were 220,000 merchant locations, and sure, they're the largest merchants. But the MCX merchants, some of them are actively decommissioning NFC because they want to have that current C application be the winner. So yeah, don't roll any trucks based on Apple Pay's existence. From a FI's perspective, we'd be recommending, look at what can you deploy from inside your mobile app. Could you, why not work with Sequent or SimplyTap or to support for your Android users, which by the way is the predominant of your smartphone based, put out an app that you can use for a tap and pay from inside your mobile banking app. How cool would that be, right? It supports the brand, it supports the card, and it keeps reminding the consumer that, hey, it's my bank that's giving me this card. So, and that's a pretty low comparative rolling trucks and deploying NFC, betting on that NFC might be successful. Might not touch the ATM directly, but at least that same app could tell me where the nearest ATM is.
I completely agree. The NFC launch and announcement from Apple is actually not the first mobile NFC announcements. There has been, over the last few years, several announcements by who was at the time the market leader, Nokia, Google. Apple is not a market leader in smartphone, and so while it's great that they're launching an NFC phone and endorsing it as a technology enabling mobile payment and a lot of other things, I don't know that it's really a kind of a game changer in terms of, okay, NFC is the winner.
What do we do when we're fearful and we're uncertain, and it's the same thing you do when you sense a predator, you freeze, right? And so we stall on these kind of implementations, and that's bad for the overall initiative of in-payments. And I think that the reference to VHS versus beta, I think, is a perfect analogy in so many ways. I think if there's anything that we can do is probably a couple things as business people. One is we could raise the bar on the conversation so that we can talk about the pros and cons, so that what's being developed isn't developed in a vacuum without regard for the infrastructure. So I think we need to do a better job of saying, when you're doing this thing over here, we could really, really help you be successful with your clients if you made it easy for us to do this, And I think, again, NFC looks like a likely winner, but I think that's, I just think it's dangerous to call it a foregone conclusion. The other thing is that I think as business people, we keep our bets small, right? We just can't go all in on anything. One thing that I have learned over 30 years of being opinionated, that the absolute more certain that I am that I'm correct, that I absolutely know what the hell I'm talking about, the more likely it is that I'm wrong. And so I'd keep our bets small and I wouldn't put them all in.
We have time for one more question.
Okay. Hi, George. This question is actually for you. I wanted to touch on the MCX comment that you made in your presentation. And I know that CVS was part of MCX and they moved over to Apple Pay. Do you foresee that in perhaps in the future, something that's going to possibly happen more frequently, that folks in MCX will be moving over?
So what I understand is that the original cadre of merchants who invested in MCX actually had to sign an exclusive agreement that we're just going to do this. This will be our mobile wallet. My opinion is that the Apple Pay approach, though it uses tokenization, which is obviously tied directly to the ISO card message format, MCX could benefit a lot from having the fingerprint biometric authentication, the device ID for its own use. So the question to me is, would MCX accept a transaction from an Apple Pay initiated? Could I do an MCX transaction in the currency wallet using the Apple Pay infrastructure? I think they could. It's not a technology problem. It's really a business decision. And MCX is, unlike a lot of folks who are building mobile payments, they keep things really close to their vest. So we'll see what they do. There's no technical reason they couldn't do it.
Perfect. Well, thank you so much, everyone. Our panelists are going to be here throughout the day, so feel free to stop and ask them any questions at any time. Let's give them a round of applause.